Alright guys, so in this video, I'll be breaking down the top 10 key things you need to know for your trading analysis. And I actually made this note back in 2020 when I was studying ICT's old course. So I'll just be further explaining each line and let's get to it. So number one is we highlight all of our trades around a bunch of confluences. Yep, that's true. We don't just enter off one confluence. We don't enter off, oh, look, it's an OTE, or look, there's just an order block. We need a bunch of different things. Kill zone's a good thing, which I don't think it's here. Oh, yeah, time and price theory. Kill zone, if a power of 3 is forming, an order block, if we're following the institutional order flow or trend, market structure, institutional support and resistance levels, fair value gaps. The more confluences we have, the better the trade idea. So number two is now, the 4-hour and daily institutional support resistance levels are strong institutional levels. So what I mean by institutional support and resistance levels, it's basically everything written here. So order blocks, fair value gaps, break blocks, all on the higher time frame. Fibonacci levels, OTE. There's actually, let me just put OTE. So that's what I mean by institutional levels. Now, institutions and banks watch key levels at daily and 4-hour. By hunting the reaction of the higher time frame, it really puts the odds in your favor, so base your trades off these levels. Yeah, so what I've noticed from my experience and also from watching ICT's old course is the higher the time frame, the more accurate the trade idea is. I don't find the lower time frames as accurate, so the 5 minutes or the 1 minute, and I know ICT started trading on much lower time frame in this 2022 YouTube videos, but I find that the higher time frame, like you mentioned previously, 4-hour daily institutional support resistance, those are the most accurate. Those are what you want to have, what you want to base your trades from. You want to have that higher time frame backing you up, and then on the lower time frame you can look for entries. So sometimes when unsure, it's best to wait for rejection before entering and confirming that higher time frame institutional support and resistance level. Yeah, so if we're at a daily order block, right, and we're not too sure if price will reject off that level, what we can do is we can wait for a rejection. We see a nice rejection, then on the lower time frame, we can look for entries to buy or sell off that rejection. Or sometimes they'll just blow right by your higher time frame institutional support and resistance levels, and then you know that the bias is different. But yeah, if you want to wait for a rejection, that will produce an A+ trade setup as well. So number three is low risk, high probability setups that derive from the higher time frame levels. Yeah, so yeah, like I just mentioned previously, the higher the time frame, the more accurate your trade is. Those are much better trade setups rather than looking at the 5 minute or 1 minute without any higher time frame backing it up. Number four is always trade with the direction of the trend. If we are in a daily order flow or trend of bullishness, it doesn't make sense to be shorting even if it's only intraday trading. Just sit back and wait for the market to form a bullish institutional support inside the bullish trend. 100%, if we are bullish, we don't want to be selling on the retracements. It's better to be patient. Wait for the OTE retracement, wait for price to come back to a bullish order block, and then enter on those trades. You want to enter on A+ trade setups. You don't want to get greedy. You don't want to enter on these low probability trade setups. It's not ideal to be entering shorts when we are bullish because that just takes up mental energy. You may be right, but it takes up mental energy. It's not a higher probability trade setups. And we can only have so much setups that we can enter before our brain or mind gets tired or we have enough stress. So it's best to wait for high probability trade setups and always trade with the trend, even if it takes time. There's also a statistic with prop firms that majority of the payouts are traders who only place 3 to 10 trades in a month. And after seeing that data, I was like, that makes so much sense. Like I already knew this, but seeing that data now backing it up, it gives it even more confirmation that it's always best to wait for high probability trade setups, A+ setups, higher time frame backing it up, following the institutional order flow or trend. So now number 5, as extra confluence, look for USD, so like USD XXX SMT divergence when expecting turtle soup raids. So SMT divergence, I don't think I have a video, but I'll do a video on it. It's nothing too complicated. So say for example, we are bullish on DXY, right? If we're bullish on DXY, then foreigns, EU, GU should be bearish. But say for example, there's cases where we're bullish on DXY and then EU is bearish, right? Euro USD is bearish. But for some reason, GBP USD is bullish. So that could be a sign on GU that we're expecting some sort of turtle soup, and then price will continue on bearish. So that's basically an SMT divergence. Number 6 is there are always going to be days when you shouldn't be trading. You don't need to trade every day. Yeah, so like I said, that prop firm data of the majority of payouts come from traders who only place 3 to 10 trades in a month. This supports it as well. You don't need to trade every day. There's not going to be trades every day. People who trade every day, they're not looking at A+ setups. They're probably not even profitable as according to the data. So it's always best to understand that there's not going to be trades every day. And sometimes there's not even going to be trades every month. And I also have Umar Ashraf, a 7-figure day trader. Look at his journal from last year. Did he trade every day of the month? No, look, he had a week he didn't trade, a week he didn't trade, a month he didn't trade, weeks that he didn't trade. So understand, guys, you're not going to be able to trade every day. If you don't know what's going on in the market, then sit on the sideline. There is nothing wrong with that. Wait for things to clear up a bit. Yeah, so you need to understand that sometimes you don't even know what price is doing, and that's perfectly fine. The top traders, they don't know what price is doing all the time. There's going to be times when price is consolidating or price is doing whatever. We don't know whether we're bullish or bearish or right in the middle. We're a little confused. But there's also going to be times when, oh yeah, we're definitely bullish. Oh yeah, we're definitely bearish. So just sit in the sidelines if you don't know what's happening. It's always best to be patient. In this industry, the success formula is very different. In other businesses, the harder you work, the more money you make. In trading, the harder you work, it does not necessarily mean the more money you make. The more patient you are, the less you are off the charts, the less you're doing stuff is actually the more money you make. So it's very different. That's why trading is a little bit different. So that's why trading is a little bit more tricky to be successful in. Number 7, avoid trading 2 to 3 hours before any red folder news, especially NFP, CPI, and FOMC. Yeah, I agree. Sometimes during FOMC or really big red news or like something big is happening in the economy. So like FOMC currently, the interest rates are a big thing because we're having bank runs and all that. So we had FOMC last week, New York session before FOMC. So FOMC is around 2 p.m. Eastern time. New York session is 8 a.m. Eastern time to 11 a.m. Eastern time. And what ended up happening was we were just consolidating. We had no type of movement. And then when FOMC occurred, bam, we had some crazy movement. I actually have this in analysis. Wait, I actually record this in analysis. So yeah, right here. Look, this was on the 15-minute. This is not even 1 hour. This is on the 15-minute. We had prices just consolidating during FOMC. And then boom, we had big movement. If someone was buying, they would have got slipped badly. So this is an example why we don't really trade before big red folder news. Big red folder news. You have to understand. There are some red folder news that aren't that big or barely anything happens. So NFP, CPI, FOMC, those are big ones. We also have PPI. The odds of success are greater when you trade with the trend. Trying to sell even when scalping, when the market is poised to trade higher, stakes the probabilities against you. Exactly. When you're trading against the trend, the probabilities are against you. We don't want to trade against the markets. We want to trade with the markets. We want the probabilities to be with us, not against us, like mentioned previously. Number 9, if you cannot turn off the charts once you hit your daily goal or hit your daily loss, that tells you where you are in terms of personal development. Oh, that's a good one. Without discipline and patience, you won't ever succeed no matter how good your strategy is. Oh yeah, definitely agree. If you have already made your money, you earn the rest. No need to overtrade when on a winning streak or become reckless when on a losing streak. 100%. That's why my system is, after I win 2 trades, I stop trading because that leads to overtrading. After I lose 2 trades, I stop trading because anything after that will lead to revenge trading. So this makes complete sense. Once you're satisfied with your profits, once you have a couple of good trades for the day, like, stop trading. You're done. You don't need to make your entire career off one trading session. And even ICT has said this. Let me go back to the psychology section. Oh yeah, and this is what I was talking about majority of the payouts are from traders who only place 3 to 10 trades. So as we can see here, number of trades in a cycle. So a cycle is a month. So 3 to 10 trades, right? That's 33 plus 2 is like, that's around 59% of the payout percentages are from people who only place 3 to 10 trades. And this is also the least amount of traders. So that's why most traders aren't even profitable, because they trade every day or they place a bunch of trades. Give me 1 second, let the motorcycle pass by. And the traders who trade more, 25 plus, they only take 2% of the payout. So that's interesting. But going back to what I was saying, you don't need to make your entire trading career off one session. And ICT says this.
Entire fucking lifetime career in that one trading day. The fuck is wrong with you? Stop thinking like that. That's what every neophyte retail losing fucking prick does. I'm telling you, because I did that same shit when I was 20 years old. Stop. You have to expand your expectations beyond that right now moment. How is the decision you're about to make right now going to impact your career? Is it going to fucking end you? Are you going to invite the ending of your career in that one trading session, that one trading day? Because that's what you're really fucking doing when you break these rules.
Yeah, so like he said, if you break these rules, if you don't follow your system, if you keep on trying to trade, and try to make your entire career off one session or in 1 week, or get impatient or try to get rich quick, you're going to end up in a bad position. Every trader has gone through that. But the thing is, even if I tell you this, you're going to do it anyway, because we have greed in us. It's natural human behavior. And only through experience, through that pain, do we truly understand what he means, what other traders mean by follow your trading system. Don't be greedy. But once you make that mistake, you'll learn from it. And you'll become a better trader after that. And number 10 is Monday and Friday are the least symmetrical in terms of price action. ICT has mainly been limiting his trading to Tuesday and Thursday. Yeah, I agree. Fridays, my trades are not really the best. But I still trade Monday and Fridays if there's a very, very, very clean trading setup. So I wouldn't limit Monday and Friday. But that's basically all of it. So that was the top 10 key things to apply in your trading analysis. I hope you guys got some value out of that, and I'll catch you guys in the next video.